Worldwide cryptocurrency regulation continues to evolve, reflecting increasing governmental focus on integrating digital assets into mainstream finance while addressing security and compliance concerns. In the United States, regulatory momentum is building around asset classification, with the Federal Reserve adopting a hawkish tone amid conflicting economic indicators. Recent data on U.S. employment reveals a surge in October job cuts, reaching levels unseen since 2003, prompting the Fed to consider tighter monetary policy. Despite this, crypto markets remain volatile amid persistent outflows from Bitcoin ETFs, over $2 billion in recent weeks, raising questions about institutional appetite. Moreover, recent market analysis indicates that Bitcoin's supply and profit has plummeted to a 2025 low, signaling possible capitulation and increased market fragility. Still, analysts suggest that if key support levels hold, a rally into Q4 and early 2026 remains plausible, with some experts predicting a new bull phase driven by retail demand and institutional accumulation. Meanwhile, in Europe, regulatory bodies have actively debated privacy concerns, with the EU briefly close to approving the controversial chat control regulation. The proposal, which would mandate scanning private messages for suspicious content, faced significant backlash and was ultimately rejected after Germany refused support. This episode underscores tensions between surveillance regulations and encrypted communication, with privacy advocates warning of potential centralization risks in Web3 ecosystems. Asia's regulatory landscape is also shifting. India's government and industry leaders are pushing to turn Mumbai into a leading hub for tokenization, with plans to unlock an estimated $566 billion in assets, especially in real estate and lending. Additionally, partnerships like Polygon and fintech startup Ank aim to launch India's first sovereign-backed digital tokens, solidifying the country's growing ambitions in blockchain-based finance. Other countries are enacting progressive measures. Australia's Securities and Investments Commission, ASIC, has issued a warning that Australia risks falling behind in adopting tokenization technologies, urging industries to accelerate blockchain integrations. Similarly, the UK's Bank of England is working to match the US in establishing stablecoin regulations under upcoming frameworks. On the technological front, sectors are embracing blockchain adoption. The S&P Dow Jones has selected Chainlink as the Oracle provider for real-time index data on Avalanche, signaling institutional confidence. Ethereum has reached record transaction speeds with Layer 2 solutions like Lighter, fueling debates over whether Layer 2 growth benefits or siphons value from the mainnet. In pre-sale and project activity, opportunities like Bitcoin Hyper, which has already raised over $26 million in its token sale, aim to unlock Bitcoin's latent utility by developing Layer 2